Hello traders, good morning, good noon, afternoon, midnight, night, how are you today? Let's have a look what we have here. Refreshing news. Okay. Oh, we have the chat going and I still not on. Alright, good to see you guys. I'm good, thank you very much. Thank you very much. Looking forward for the non-farm payrolls. Don't trade much this on such a day, such moves, because it's not trading, it's gambling on majority of the pairs. So we better wait there. There are many interesting events since yesterday, guys. So let's not waste the time and let's start get going over that. The first one, the pound. The biggest question we can ask is, by the way, you don't see my screen, right? Now you should see my screen. Just give me some, okay? Just give me some yes. Perfect. Perfect. Thank you, guys. So the biggest question is what's going on with the pounds, right? How come they increased the rate and the pound dollar is still dropping down? The answer here, guys, as we already say this week, the question is not about will they hike or not. The biggest question was and still remains what's to come later on. And as it looks right now, the answer is that they will not rush to hike anything else soon. They will simply look to go and start to drop the quantitative easing. Basically, follow the Federal Reserve plan. That's all. That's the bottom line. This is a very weak sign from the leaders and a very strong sign for the bears, and that's why what we saw was, yes, we broke this high, but it never survived above it, as you can see. It could not hold it. It was spiking, trying to make a saying, but the only saying it could do was, hey, the bulls are not strong. And this is exactly why I told you guys, we don't blindly move here from the bearish view we've had to bullish, but to both. Why? Because this is still a range. We want it or we know or we don't. This is still a range. And there is no reason on earth to go and to force the pair to do anything it doesn't want to. The bottom line here remains both for one reason. This is a range, which means it can go and bounce here and fly towards the 140, 145, which is expected for the long run. On the second time, there is a great chance now that our second scenario that we have been talking about on the last couple of weeks, to get it to 128, 127 based on the weekly cycle, comes in play. So the best thing for us, the traders, in such cases, is to follow up the current momentum. Now after the news released, basically the momentum is back to bearish. This is the bottom line. Currently, of course it might change until tomorrow non-farm payrolls and after that, right? But currently the bearish pressure is on. It's here. It has a saying from the market, and therefore there is a good chance what we will be exposed to is something like that. Is that something that is really good to trade? Take a look on these charts, guys. Do we really see any good opportunities to trade here? The answer is no. The answer is no. It's good for gamble. It's good to call for tops, to call for bottoms and everything like that. But is it really tradable as per systems? The answer is no. Is it tradable per cycles with good re-entries levels? The answer is again would be no. Right? The only thing that the pair did, the only good thing that the pair did was this false break with this convergence principle. And the reason it's convergence principle because we have both negative histograms. That's the only good thing it did. So the bottom line, the pound dollar is remaining in both directions with a current momentum sell. So if we have two waves up and breakout with a hold, we have a sell call. If we don't, simply better not to touch. And I always show you that and tell you that, guys, art of trading is not about when to trade and how to trade, but mainly about when not to trade and how not to trade. It's all about that. Okay, it's all about that. I always compare it to the sports world, right? The world of sports. Imagine boxing. If you just keep punching, stopless, after round one, you would be without any energies. This is the idea. Wait with your trading punches. That's the bottom line. The next pairs it has an immediate impact on are all the pound pairs, and I would like to start with them and cover them all before we move to the yen pairs, who will be the next ones. Euro pound is bouncing from here, the 61.8 zone. We have the bullish divergence. We did not have any relevant false break here due to the two candles rule. None of this. The only one when it started to be relevant is basically, believe it or not, only here on this little one, and only here because this high is now broken. So the euro pound, which we were looking only for two waves up and sell the breakout, never got activated, never got relevant for a resell. We have been riding a beautiful sell all the previous week. This week we wanted two waves up and sell, never happened. Therefore, the euro pound is now switching from one direction to the sell to both direction with current momentum up. And why? Because we don't change our long-term plan from the weekly, which we still want to sell the rally. But according to daily cycle, we had a double cycle down, this one, right? 1, 2. So we can here go to the 38.2, which would be 0.8950. And we can start looking and developing a range. One false break on the bottom and one false break on the top. So the way I see that, we are going to 0.8950 up to 0.9050. This is the zone where the bulls should take it to. So euro pound, guys, the main update here is the change to both with current momentum bullish. And the only reason for that is the break through this high straight. If we drop to 30 minutes or the 15 minutes, even though there are no classical conditions for the two candles rules here, this is considered to be a special cycle, and therefore every pullback as for now yet should provide a buy opportunity. And why you can see that, why we cannot show here any good technical setup, because on high volatility news events there are no technical setups. It's all a noise, it's all a speculation, it's all about the immediate money flow momentum, not a technical setup. And this is why it's almost impossible never to join blindly such opportunities unless you just gamble and jump in, whatever happens, happens. As for technical views, there are almost no opportunities to join such ways. They look good, they are tempting, but they are almost not tradable. This is the bottom line here. Okay? So if we will start to get these pullbacks providing us the re-entries, we can definitely start looking for short-term bullish continuation towards 089.50 up to 090.50. Who knows, maybe even a bit higher. But for long term, we will still be after sells. So this is the immediate update we have. The next pounds on the list to be updated accordingly: pound Aussie, pound CAD, pound franc, pound yen, pound kiwi. Let's start. Pound yen is the immediate one. Also, same story. Broke this high. So what? Did it manage to hold it? No. And this again, why we have the pound yen for both, and the current momentum, as you can see right now, guys, seems to back to bearish. So we need to go below this low. We need to break this trend line, and if we do, as it looks right now, we can then look to sell the rallies, aim for 2 waves correction. And I want to remind you where it all comes from the daily cycle. We had this beautiful double cycle up. We had this beautiful double cycle up. We would expect that deeper correction to the 38.2 of this cycle, and we would expect the second leg down to the 38 here. So from my point of view, if the bears are here to take the control, which seems correct, we are aiming the 146, and later on we are aiming the 142 zone right here. That's as per pound yen. Our view remains both. If we go below the trend line, which is happening almost live, and if we go below this trend, this supportive zone, our momentum would be only bearish. Okay, so as for now, both directions are tradable. It doesn't mean at all we have a setup as for now. We don't. For us, a good setup is when we get any momentumal direction, right? Any momentum, like if it was up, we need 2 waves down and breakout. If the momentum is down, we need 2 waves up and breakout. We don't have it. Not here, not here. So as for now, this is clearly not tradable. But this is exactly the reason why both directions yet acceptable to be traded. Break below this low and a trend line and game over to the bullish side, we are back only to the bearish side. Okay, that's for pound yen. It's going quick because there is nothing else to mention. And the pound franc, same story exactly. If you remember what I told you guys at the beginning of the week, break above this high will not mean for us we are only bullish, because it could easily turn to be a false break. Why? Because of this divergence developing and the fact that this is a double cycle. We have some magnet zones there. Therefore, pound franc is another one that remains in both scenarios. But, and here is the but, we need to start to pay attention to, again, it's not correct in terms of the candles, but it is how basically how news momentumal movements look like. If it's about to complete 3 waves like that, we can easily go and start looking only for the sells. The current momentum is without any doubt bearish versus this high. If we start to get 2 waves pull back, classical, we can start looking for the sells. Our targets, this double cycle 38.2, and then the big double cycle 38.2, which would be right here, 127 zone. That's as per pound franc. My biggest tip here: do not overexpose yourself, guys. All the pounds are basically moving due to the pound. None of them are moving to the other pairs. Be careful. Pound Aussie and pound Canadian. These two reached our bullish targets we've had here, the 61.8 for the short term. For the long term, we still have it higher, of course, but as for now, we are probably to that correction. Do we have any signs here? The answer is no. The only thing we do have here is now this lower lows momentum, which the pair starts to gain. Again, no triple, no special, just a momentum, just lower lows, just one bounce from the cycle of the daily. In simple words, we cannot get here not triple, not special, not arrange, because it's a pure money flow, flying money, what we call, right? Flying money. And what we need is pullbacks and look for setups. Will we get it? Only time will tell. If we don't trade. If we do, we can trade. Just don't force it. That's the most important thing. And same with the pound Canadian. It has reached our targets here. We went through that. On the 4-hour chart, it completed a monster triple cycle for us. 1, 2, 3. Beautiful combination. Now breaking these lows, same story. As long as this top holds, we're looking for sells. Okay? Because we don't have clear cycle, triple or special down, we cannot call it one way. That's why both directions are acceptable to be traded, but you can see that it's clear and obvious. There is no memory for any bull at this stage. Targets for this correction, 166.50, maybe even lower to 165. Pound Aussie we discussed. Pound Kiwi, same story. I will not repeat that because it's basically the same and it's obvious. 38.2 of the daily cycle and then a 50. So in other words, 187 down to 184. This is for pound versus the Kiwi. Okay. This is now a convergential principle. It looks good. It looks correct. At the end of a cycle, we cannot ask for more. So we are to 187 to 184. Most likely from there we are back to bullish, but it's far away from us at this stage. Any questions about the pounds, guys? Yes, no, maybe. If you have any, this is the time to ask. I wanted to start with them because they are the most important ones, of course, at this stage. Any questions, guys? I remind you, we are completely interactive. If you want to take the microphone and talk and not just write, just let me know, please, and I'll pass the microphone to you so you can present your chart live. Any questions, guys, girls? Actually, I can see the girls are almost control the room today. So 9, 10 girls today. Girl power, almost controlling the room, almost. 10 more, 20 more, and we are there. Girl power today. Yeah, something like that, Roshan. If I will tell that to my wife, she will start to attend every morning. Just to keep an eye. All right, let's continue, guys and girls and guys. So if we don't have any pound questions, then we are moving on to the next pairs. Let's discuss about the yen pairs. Dollar yen, while holding this top, our view remains bearish. Now, this is technical view. Fundamental view, during non-farm payrolls week or FOMC weeks, the yen pairs are the most trickiest ones. The most trickiest ones. As per cycle rules, convergence, two waves retrace, and so on, we don't have any call here. That would be perfect if it would cross this high. It didn't. Therefore, it doesn't provide nothing much. So this is great only for systematical trading, which means based on any system. Sometimes we can trade based on cycles when they are readable and clear, such as this, which we will discuss in a few minutes. And sometimes it's not. Pound pairs, as we can see, they are moving according to weekly daily cycle. But on the short-term cycles, they simply don't provide any opportunity. No two waves retrace, no Fallback convergences, no ranges, nothing we can yet use. That means that it is all about the noise as for now, and we better wait for the better opportunities. It's a way for Mr. Market to say, hey, buddy, patience. I'm not in my best day of the month today. That's basically what the market is telling us as for now. Dollar yen, as long as we are holding below this top, the expectations were and remain bearish. This is the dream. This is the realistic target, 112. But the fact is, we had two fallback on the top, we had one on the bottom. There is a good chance that this is a small range inside a big range. If we do start to create the momentum and lower lows, that would be the best say for Mr. Market. The bears are back in the town and the bears are hungry. Okay, so eye on that. We don't have yet any cycle setup. The only thing we could have here is a systematical trading, like 1, 2, 3, 4, or Scorpio, or SRS, or things like that. Nothing in terms of cycles, pure cycles. So our plan does not change. Bearish while this top holds. Break above this top, and I remind you, we are not bullish, we are not both, we are neutral. Simply because it could turn to be a fake breakout. And how does that affect the other yen pairs? Euro yen. This one looks better. This is our trend line, and it is attempting to break this one down. Our euro yen for the long run direction remains bearish. In simple words, this is a bearish hidden divergence. On the 1 hour chart, we have a basic divergence. As long as this stop now, this stop, as long as it holds, we can start looking for possible sell opportunities by breaking this trend line. So 4 hour chart bearish hidden, this one is a basic divergence, looks good, looks correct as versus this stop. That's the only thing here. Keep your risk and attempts on minimum. Why? Because we are during FOMC week and non-farm payrolls to come tomorrow. As I said few minutes ago, the yen pairs are the most affected pairs during these weeks. We better be careful. OZN is following basically, and break above this trend line now could provide us the same idea as the euro yen. 1 to 1. Bearish hidden, basic divergence here. So versus these stops, we can start looking for sales. Do not overexpose yourself anyhow by the yens before the non-farm payrolls. It's a rule of thumb for good, normal, reasonable trading on such weeks, guys. Remember that. Very, very important. Pound yen, we talked about. CAD yen is basically same exactly. Same exactly. Okay? Like the two others we discussed about. Next one, dollar CAD. Dollar CAD, one false break on the top right here. Oh no, it's not a false break. It just looks like. No false break yet on the 4 hour chart. On the 1 hour chart though, it is forming for us. What's that, guys? Who can tell me? It's actually from this top. Who can tell me what is this? what it's building for us. It looks like a triple, which actually could, yeah, it's a triple cycle that could turn to be a special, right? 1, 2, forming the 3. So 2 waves up, breakout, and we have ourselves. So the dollar CAD now basically is saying that from both it is changed to bearish. That's all. Okay, versus this top. Dollar CAD is on bearish mood. Targets for that. This is the big cycle and this is the short cycle. So what we have here is 127 zone, 127.30, and then 126. Okay, that's our levels for the possible short opportunities. So dollar CAD switches from both to bearish versus this top. Why? Because it is forming for us triple, which could develop into special as well. 2 waves up, retraces, breakout, and we have a cycle call. Okay, dollar franc, no changes here. The only thing that we do have here is a false break. So we either get 1, 2, 3, and it becomes bearish as well, or it starts to be a range, and then we need 2 waves up, breakout, and a sell. So dollar CAD did become a bearish. Dollar franc is yet in both. Nothing too clear and too clean on this pair yet. Let's continue, guys, to the Pacifics. Aussie dollar. Aussie dollar. What this pair is doing for us is trying to create. Yeah, it is trying. It's fairly trying. Let's see if it successfully does that. Let's see if it successfully does that for us. No, it's still only 2 ways. 1, and this is still the second. No 2 candles rule here. So as for now, Aussie dollar is also remains in both direction, and that could become the next sell. Okay. By the way, for Aussie dollar, you can see that, guys, we do have a bounce from 61.8. Accurate, beautiful, but no false break, no 3 waves up yet, not 4 hour, not 1 hour. And this is exactly the reason why we have to play here more conservative. So yes, the momentum looks like it's about to change. It didn't change yet. And this is exactly the reason for why Aussie dollar remains in still in both directions acceptable completely. We could easy stop here and start the next move down to another low, to a new low, something like 0.75. So we don't rush there. And the New Zealandian dollar, well, this one we discussed about exactly 2 days ago when it broke this trend line. Now this pair seems creating for us bigger view of triple. 1, 2, 3, and this one now becomes bullish. This one is the invalidation for the bullish view. So as long as the bottom line, as long as the bottom holds, the pressure here is bullish. This would be our invalidation level. Targets for that, the special cycle here, here are the levels. We are going to the 38 to 50 zone, so up to 0.70, and then the 38 of the double cycle, which is 0.7050, and then the top of the weekly range, which is 0.74 potentially. Seems impossible right now, right? The only thing is we have on the middle this triple cycle, 1, 2, 3, so we can also get the 0.72. So, did I say too much? As long as we are above this low, we are looking for the buys. And this is the invalidation level for bullish view. Roshin, when it's a range, do we always wait for the price to test the old support new resistance? Yes. Basically, the idea for range is like that. When you create a range, let's say one falls back on the top, one falls back on the bottom, right? Bottom, top. So you need one more visit here. And the thing here with the range, very simple. After the first two false breaks that you approve a range, two more false breaks are possible. So what we need is that this leg, let me cover the other color here. This leg from here to here would be a cycle by itself. Most likely it would be a double. And then you can trade the breakout from the bottom of the range. If you have two waves up, you can trade the breakout to the downside. Normally, a range is an ending cycle, right? An ending cycle of something previous to happen. So let's say before this range came, you had two big down, right? And then a range, so you better look for buy on the bottoms. So in other words, two waves down, every two waves down on the shorter targets, shorter time frames, and you are after buys. Why? Because you had a bigger cycle that is ending, and the range is an ending cycle by itself, corrective cycle. Okay, this is the idea. All right, you're welcome. You're welcome. Let's continue, guys, to the next one. New Zealandian franc, same story. We don't change here nothing. Our plan is bullish while we are above this area. Targets 38.2 of this cycle, which is next to 0.70, and then the top of the range, which is 0.72. Euro New Zealandian, here we are. We need to start to pay attention to this pair because it does have for us 1, 2. If we get one more, it is a bearish call. As long as we don't have this, break above this trend line could wake up the bulls. Okay, but one more low will be considered as a triple cycle and then a bearish call. If we do have this triple cycle, we are going down to 38.2 to 50 of this cycle, which would be 164 to 162. And the final one for us would be 162, we said already, and the possibly 159. So keep a very, very close eye on the Euro Kiwi, guys. It could easily start to create this kind of triple cycle. 1, 2, 3. 3 descending or anything like that. Then seller rallies would become the best plan. Okay, keep an eye on this pair. We do need new low in order to activate this bearish call. All right, let's continue then. What else? What else I had on my list? Pound we discussed. Euro dollar unchanged. Nothing here. No 3 waves yet completed, but we do need to start to pay attention to this exactly happening, forming now live. 1, 2, and possibly 3. Why I say possibly? Because it could still block here as a range. If it continues its holding, guys, the bullish call is back, and then 2 waves, breakout, and we are to the bullish side. As long as it doesn't happen yet, we don't change nothing in the view. If it does, that means that this bank zone that we've had from previous week, from Monday, remember we discussed about that? If that happens, that means that this bank zone holds and we are getting ready for another rally. We are not there yet, but keep an eye. If this turns to be triple with double, so 1, 2, 3, and from this area we start to get 1, 2. By tomorrow, most likely non-farm payrolls, we are back to bullish. As long as it didn't happen, we don't change nothing of our plan. Okay, but keep an eye. That could be a saying from the market. Of course, I will update you tomorrow if that happens. But I do want you to remember that and keep that in your list. Okay. Great. The next ones, let's talk about the gold and the silver. This is a triple descending cycle. What's a triple descending cycle? When the first leg is bigger than the second, bigger than the last. This is triple descending. 1, 2, 3. Gold becoming a bullish call again. It's also now breaking above this high. Looks perfect. So gold is back to the bullish direction, from both to bullish versus this bottom. Okay, this is the invalidation zone. Only break below that we will have to stop and say, okay, let's reanalyze, rebuild the cycle plan. As long as this stop holds, we expect it to rally higher. Targets for that would be here. The 1297, basically 1300, and then want to remind you, we expect much higher for long run. Yeah, we expect it much higher. So let's see if that could be a beginning for a bullish call for us, at least for 1300, and then we will see. This is the invalidation level right here, 1263. Silver is the same, unchanged. As long as this bottom holds, the momentum is bullish. This is the critical level for us. Next one, oil, still did not have for us triple cycle down and not even double yet. Therefore, nothing to trade yet. The momentum is yet bullish. Natural gas, break above this trend line, which is happening here and now, waking up the bullish call. Natural gas is back to bullish view. All right, with invalidation of here. And it's happening here now, live. So this is our invalidation for the bullish cycles. We start to look for the buy setups here. And indices, I promised to go over that yesterday. Something happened, and that was 2 false breaks in a row with a convergence. S&P is bearish with this level as invalidation. All right, simple, nothing to say more here. As long as we are below here, we start to look for bearish setups. And who knows, maybe this is the top of the run. It's too early to discuss about it even, because we are still against the weekly and the monthly and the daily, but everything begins at some point, right? Every journey starts from step number 1. Same here. This convergence might be it. Will that or not? We still have the FOMs, the non-farm payroll tomorrow. Good luck with that, right? But it is a say from the market that, hey, something is happening. Nasdaq, we don't have false break, we don't have convergence, so we don't have any valid sell here. The only thing we do have for the Nasdaq is this bank zone. I have problem with this zone, I admit. The reason is the very lazy break. It should be massive breakout, and this one is very lazy breakout. So I wouldn't jump in the Nasdaq. I would, however, start looking on the Dow Jones that does have 2 false break, and this is the last low. Break below here, and we have the Dow Jones joining the bearish view as well. As per in stocks, the only one we have on the list to update is this one. Shake Shack reached the top of the range right here. So the second target for us, we were looking at the 39 zone. It missed a bit of the 39, and now these patterns looks too tricky, right? So my warmest tip on such situation: get out. We've been riding beautifully from the middle here. 8 full points almost. Sorry, 7 full points almost. It's amazing. That's a rally of almost 25% of the value, almost. It's pretty amazing. And now it's a safe from the market. Get out. Ralph Lauren still going and going pretty cool. Unchanged. We have to be break even here. Have to be break even. If anything triggering us on the downside, we are protected. You can see it was flying towards 96 today and crashing now. Something might be happening here, guys, and we need to be careful. TripAdvisor unchanged. We're still waiting for the breakout. It's pretty far away, so nothing there. Veil also nothing yet there. We do need the break of this trend line, which is still on the follow list, and basically that's all. We do start to pay attention for things like that, like Facebook, who is trying maybe to create a second false break, like Google. Where is our Google? Here, who is holding the weekly possible divergence to form. Something looks happen. We're not going to force, we're not going to rush. Definitely with stocks, we need to be very, 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 very selective, especially when the non-farm payrolls is coming. So that's all. On such weeks, guys, it's most recommended stay safe and be very selective with your setups. The fact that something is moving does not mean it's tradable. I want you to remember that. The fact that something looks like moving does not mean it's tradable. Okay, I want you to remember that. Exactly like you are going outside, right? You see some berries in the forest. Not all the berries are eatable. Some of them are poisoned. And be careful with choosing your ones, right? Same here. It's moving, it doesn't mean it's tradable. And that's what I want you to understand. There are simply situations that it's just best to say, hey, let's leave it alone. It's simply not catchable in terms of cycles. Systematic trading is different because it has specific rules. For cycles, we need setups. We need the momentum, we need two waves retrace, we need the breakout. Then we can call it an opportunity. We don't have it, we don't trade it. Rudy, for the, well, sugar I've been waiting for a while. Sugar for me, still not touchable. I suspect 11 or 10. It is still stuck inside the range. False break on bottom, false break on top. I wouldn't deal with that. No, not yet. Not yet. For me, it's a still good chance for 12 or 11 before we fly. Sugar is not healthy. Why should we be bullish on that, right? Rudy, you hate sugar. All the times we met, you said I hate sugar. So you should go short on this one, not long. Go long on brown sugar or coconut sugar. Things like that. Alright, any questions, boys and girls? Girls power today. Any questions? Perfect. Stay safe, stay strong, and let's see what the non-farm payrolls brings for us. And remember what we just spoke today, guys. Do not force. If there are no setups, no best conditions, do not trade. Okay? No one pushes you to trade every single day, and you don't need to have this feeling. Wait. On the previous weeks, you saw how many amazing setups there were. Technical. One after another. Such weeks are normally money sucking weeks. They're just suck your money. That's what happens on such days. Because you are long with every breakout, you are short with every breakout, and then, what's happening? And it happens faster than you can react. If it's not obvious, clear and clean, and the risk is small compared to the reward, do not be there. Wait for better opportunities. Take care, guys, and happy weekend to come from tomorrow. All the best, and thank you very much for attending. Bye for now.